Hey traders, Nick Shaheen here looking at Disney. Today is 4/12 and it is the day after they told us they were going to dominate the world. The stock is up. I don't remember ever seeing it up 10-11% without an earnings report, and even then I don't remember that. So huge rally. Did we see it coming? We saw it coming, but I booked my profits already, and because I saw this much coming, not that much. So there was a tight situation where it was going to be either a breakdown or a breakout. I chose to bet up, and when it spiked, booked my profits. It was nice and respectable. And then they came out with the event, and they said that the release of the new streaming process is going to be a service. It's going to be fantastic and cheap. So conversely, Netflix fell on the headline, understandably so, because they are the player there and they are down 4%, and technically they need to hold this level or more red will come. Back to Disney. So what do I do here if I'm not long already? Personally, I say usually when a candle is this big up or down, it usually is probably not a one-day event, but my knee-jerk reaction was to buy some puts, meaning I shorted the stock gently. I bought some June puts, but you know, really anywhere down here would make sense because this is a huge candle, and it's leaving a long tail below and a long tail, a slightly shorter tail above. So yes, they're up here, but what are they going to do next? One thing I'm fairly certain is they're not going to have another candle like it right back to back. So let me zoom out to a weekly chart, which will be an all-time high. So the breakout has been brewing for a while. See these yellow lines, usually when they break out of them, they get up there. Let me see if I can even lessen the noise. This is a monthly chart, same data, just 1 month. So it reduces the lines, the noise in the chart. So you can see if they break this, they should overshoot, and this is the eyeball place where they should go, maybe a little bit more. So back to answering the question, what do I do now? I'm not rushing long because of what they told me last week. Next week, I think or the next couple of weeks, they report earnings, maybe early May. So they told us all the good news, and they also told us about the new sequel in the Star Wars saga. So they left nothing really except blow out the earnings and then raise guidance. So I think that the stock will be in trouble if they don't deliver a perfect report, not just on what happened, but what's going to happen. So they just closed on the Fox deal not too long ago. So is the whole mess of acquisition is gone out of the P&L, out of the reporting process? I'm not sure. So right now it's priced to perfection. Any little misstep in the earnings is a big miss, and that's why I bought the puts. It's not saying I'm shorting the stock because of valuation, or I'm shorting the stock because of I don't believe they're going to do it. I'm just shorting the price action. Valuation, it's 16 PE right now, trailing 12 months. It's not expensive. That's a little cheaper, or about the same price as Apple, cheaper than Google and Facebook, way cheaper than Amazon, just to give you comparables that are not, it's absolute comparables, they're not like comparables. But Netflix is way up there, so it is not expensive. I bought the puts to short the price action. We're probably going to have another green tick in it, especially if the markets are going to tick up on Monday. But the markets are near all-time highs. Today was a huge open day in the markets, and it had all the good news. It was like a perfect storm for the shorts. Can you imagine being short the stock? Oh my goodness. I mean, that would be an outright short would be scary. So technically, I expected a rally off of this neckline. It didn't make sense to go this high off this neckline, but it did once we look at the weekly, like I just showed you, because of these yellow lines. This would be okay. So not a reason to short just because it's this high. Stocks end up making highs and they go higher. I'm sure it did that back here, and you know, Amazon did the same. So again, fundamentally, it's a great company. The assets that Disney owns are global. There's not one soul on this whole planet that doesn't know Mickey Mouse, for example. Their theme parks are always sold out. In fact, in Southern California, where I live, The theme park prices keep going up to stop people from going. That's how busy they are. So, and the movies are mostly hits. And ESPN Plus is working fine. So they have their fingers into a whole bunch of good stuff, and now they're cutting into Netflix's world. Netflix did all the hard work, kind of like Toyota did it for the hybrids with their first hybrid, and everybody else jumped on board. So they did the tough slug, Netflix, and now Disney gets to just simply walk in. And the thing about Disney that it has over Netflix is that the content is already there. If you go decades of content, every kid on the planet is a babysitter. It's an immediate babysitter for, what is it, $10 a month, whatever it's going to be, I can't remember, $7 a month. What parent wouldn't want that? Everybody's got phones and pads. The kids have their own phones now, so you just hand them the phone and say, here, watch some Disney. Whereas Netflix has to produce content all the time, and they're overspending. So Netflix is in trouble. Disney, this is a good source of income, and they can up the price from $7 to whatever they want incrementally. I think Netflix just raised their price. Sorry about that. Markets are open to $16 or whatever. I don't have it, but so I'm told. So this is a good thing for Disney. I'm not shorting the stock itself. I'm not shorting the story itself. I am shorting the price action just off of the earnings report. Nick signing out.